Good morning, everyone. Thank you for taking time out for Q4 and FY19 call of PPAP Automotive Limited. We have today with us Mr. Abhishek Jain, Chief Executive Officer and Managing Director, and Mr. Manish Dhariwal, Chief Financial Officer. We will begin the call with opening remarks by Abhishek sir, and then we will have a question and answer session. I would like to just point out that certain statements in today's call may be forward-looking, and we have already put out a disclaimer to that effect at the end of the presentation. So I would now like to hand over the conference call to Abhishek sir. Over to you, sir.
Thank you, Gaurav and Neerav. Ladies and gentlemen, a very good morning to all of you, and thank you for taking time out of your busy schedules for joining us today to discuss the performance for Q4 and the current financial year of our company, PPAP Automotive Limited. We shall start with a brief overview of the automotive industry during the quarter under review. During the quarter, the passenger vehicle segment witnessed a production degrowth of 4% year-on-year in the quarter under review. A total of 1.03 million passenger vehicles were produced against 1.07 million in the same period last year. The commercial vehicle production growth was flat, whereas the two-wheeler production was at 5.4 million, which witnessed a degrowth of 10% compared to the same quarter of previous year. The sluggish demand has seen an impact on the performance of the entire sector, including our company, for the quarter under review. Just a small recap of what PPAP is about. PPAP manufactures polymer extrusion-based automotive sealing system, interior and exterior automotive injection molded products. With its 7 facilities spread across the key automotive hubs in India, the company manufactures over 1,000 different SKUs and ships over 200,000 parts every day to its customers, which include the Japanese OEMs, the local OEMs, as well as other major OEMs in the passenger vehicle segment, as well as the commercial and the two-wheeler segment. The company continues to focus on enhancing its per-car contribution. In 2014, for this purpose, we had established a new joint venture for making rubber parts to increase our per-car contribution for the passenger vehicle segment. The company is able to attract new opportunities in both sealing systems as well as injection products, post the establishment of its facilities, which are closer to the customer now. We continue to focus to build on our core competence and on achieving excellence throughout the gambit of our organization. I am happy to share with you that we have successfully upgraded our ERP system to SAP since 1st May 2019. Now I would like to take you through the financial performance. The revenue from operations for the current year stood at 410.98 crores compared to 397.62 crores during the same period last year, registering an increase of 3.4%. The revenue includes part sales amounting to rupees 388.62 crores, registering a growth of 9.4% as compared to a flat industry growth. Tool sales contributed to 15.54 crores compared to 39.86 crores last year, and 6.82 crores were the other operating income. For the Q4 financial year 19, the company recorded a revenue from operations of rupees 99.13 crores as compared to 127.62 crores. Out of this revenue, part sales amounted to 93.08 crores, registering a dip of 3.6%. Tool sales contributed 5.39 crores, and 66 lakhs was the other operating income, which is the quarterly subsidy received from the Rajasthan government. The company derived 98% of sales from the passenger vehicle segment of the industry. The company's automotive sealing products were used in 63% of the total passenger vehicles produced in India. Maruti Suzuki, including Suzuki Motor Gujarat, continue to remain our top customer, accounting for 47% of part sales. Honda, being the second largest customer for us, contributed 32%. During the quarter, 23% of part sales were derived from new vehicle launches like Honda Civic, new Alto, the upgraded Baleno, MG Motors Hector, and Nissan's Kicks. We are currently developing parts for 25 new models which are expected to start production within the next 2 years. The company reported an EBITDA of 17.21 crores in the quarter as against 28.68 crores in the corresponding quarter last year and a PAT of 7.06 crores in the current quarter compared to 14.09 crores in the quarter last year. The quarter's profit reflects the result of the lower sales coupled with increased cost base due to the newly set up plants, which has impacted the bottom line. For the full year, the EBITDA stood at 77.20 crore against 84.88 crore in the last year. EBITDA margin for the current year stands at a robust 18.8%. The company's PAT for the full year was at 33.42 crores compared to 37.41 crores in the previous year. We were able to sustain the PAT margin of 8.1%. Earning per share for the quarter stood at 5.04 and for the full year it stood at 23.87 rupees. Our dependence on interest-bearing debt continued to fall, resulting in reduction of interest cost. The debt-equity ratio for the company as on 31st March 2019 stands at a mere 0.08. In the current year, the repayment of the interest-bearing loan debt will be complete. We have invested a total of 43.24 crores towards capital expenditure in the year under review. Out of this 43.24 crores, 20.3 crores were spent on setting up of new facilities and 22.9 crores on the existing facilities. The capacity utilization stands roughly between 65 to 75%. As committed earlier, all our capex requirements are being met by internal accruals. The Board of Directors have reviewed the performance of the company in the board meeting held on 22nd May 2019 and have decided to recommend a final dividend of rupees 2.5 per share, thereby taking the total dividend for the financial year to 4 rupees and 50 paise per share, which is 45% of the face value. The dividend payout ratio, including all the taxes, comes out to be 23%. Now I will give you a brief about the performance of our joint venture company PTI, which has been consolidated in the yearly results. The total income of the company stood at 74 crores, which is up by 18% compared to 63 crores in the previous year. The EBITDA stood at 5.2 crores in the 12 months compared to 6.2 crores in the previous year. We recorded an EBITDA margin of 7%. I am happy to share that PTI has started its new facility in Surajpur near Greater Noida in Uttar Pradesh. This plant has been set up at a cost of 28 crores. There are 2 rubber lines along with the assembly areas operating in this new plant. Due to the startup of this plant, the cost profile saw an upside due to the rise in material costs due to product trials. The PAT stood at 65 lakhs against 3.8 crores in the previous year. Now I will take you through the consolidated numbers. The company has consolidated its joint venture by equity method in accordance with the Ind AS 28 investment in associates and joint ventures. PPAP's share of joint venture profits and OCI is included in the consolidated profit and loss statements. Accordingly, the change in the value of the investment in JV is reflected in the consolidated balance sheet. The net profit on a consolidated basis stood at 33.7 crores compared to 39.3 crores in the previous year, and the consolidated EPS stood at 24.1 rupees against 28.08 rupees in the previous year. I am happy to share with you that the company continues its trend of receiving customer appreciation for its superior performance. Maruti has awarded us for comprehensive excellence. Toyota Kirloskar Motors has awarded us for zero defect supply and achieving quality targets. Appreciation award has also been received from Hyundai Motors, and our joint venture company PTI has also won the Silver Award for cost from Honda. This brings me to the end of my opening commentary. Now I would like to leave the floor open for questions and suggestions that you may have. Myself and Mr. Dhariwal will try our best to answer all of them.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your touchtone telephone and wait for your turn to ask the question. If you'd like to withdraw your question, you may press star and 2. A reminder to all the participants, please use handsets while asking a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Yeah, good morning, sir. Thank you for taking my question. I have a question on revenue from tools, which is down by almost 60% in FY19. So what is the outlook based on the discussion with the OEMs for next year?
Good morning, Mitul.
Yes.
The outlook for the next year is very positive, and there are a number of models that are going to be launched in the next year, and this is that plan. Our tool sales growth will be quite substantive. This is obviously as per the plans that have been shared with us as of date.
So in that case, if the revenue from that particular segment declines by 60%, so there won't be impact of utilization for the tool room?
No, the tools typically take about 1 year to 1.5 years to get ready, and then they are accordingly sold to the customer at the time of its SOP, that is the start of production. So the tool room is continuously on the job, and in fact, if you this particular quarter, the tool inventory is also on the rise, demonstrating that there is a lot of work that is basically in progress for the tools that are going to be sold to the customer during the current year.
Okay. And second question is on the capex. On next 2 years point of view, what would be regular annual run rate we can expect?
Can you repeat your question, please?
Second question is on the capex side. From next 2 to 3 years point of view, what would be our capex? And capex related to new plant is already done or still something has to be spent?
See, Mr. Shah, our capex is all basically lined up with the customer demand. So if a customer is launching a new model, at that time we have to evaluate whether we need a new machine based on existing capacity utilization or something. So as far as our plants are concerned, so Gujarat side, we set up basically 2 new plants, one in Chennai and one in Gujarat. So Chennai, we are not foreseeing any major capital expenditure in plant and in the basic plant, except for if we have some new business with the customer, we might need to buy a couple of machines, but all that is again tied up with the customer itself. Gujarat plant, our current plant has a capacity of about 500,000 cars which can be serviced from that plant. So as the SNG in Gujarat is now ramping up their own capacities, we may need to ramp up this 500,000 capacity of servicing these cars to 750,000. So that might need some sort of a capex.
So can you give any rough number excluding any extraordinary orders received from what would be the regular run rate?
regular, if we look at our historic numbers, so I think about 15 to 20 crores is what is on an average what we have to spend on the capex side in all our plants every year.
Okay. My last question is on the export side, which is still close to 2% of the revenue. So, any target internal ambition to reach to a certain level in next 2 years?
So this is not direct exports that we do. These are basically CKD exports which are done by our customer. So what we do is we make the part here and then supply it to their local warehouses, and then our customers export these parts globally. So this business is, we are constantly in touch with the customer, especially Renault Nissan, and we expect to get some good orders in the next 1 or 2 years. So this year we might start exporting our parts to Russia also. So this will be primarily for the Kuwait model. We are already exporting these parts to Brazil, and now Renault Nissan is finalizing their plan to make that same car in Russia also. So we will be starting our supplies to that country as well. And of course, we are discussing for other opportunities with Renault Nissan for the CKD export business.
So this 2% is almost primarily Renault Nissan.
This is primarily Renault Nissan, and it has some portion of Toyota business also, and some portion of Honda business. But majority is Renault Nissan.
But nothing very major in terms of direct exports, even in next 1 or 2 years.
No, direct exports is not something which we are targeting right now. The CKD export is more of a focus for us.
Okay, thank you, sir.
Yeah, thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sunny Agrawal from PNB Investment Service. Please go ahead.
Thanks for the opportunity. Sir, can you throw some light on the new product launch? It seems so very exciting. I mean, you have launched few new products, front grille, instrument panel, cluster, and so on. So, what is the expected contribution from these new products over next 3 to 5 years? And how is the new product pipeline looks ahead from here on? Thank you.
Yeah, I heard part of your question, so and I will answer that. In terms of the new projects, we are continuously getting new business from the customers, and as of now, while we speak, we are working on 25 plus projects, and these are across customers, across products also.
Mm-hmm.
So that was one. What was the other thing that you were wanting to understand?
No, sir. I was just asking, in our presentation, I was looking at that we have launched few new parts like front grille, instrument panel, cluster, and so on.
Yes.
So, what is expected? I mean, that seems to be a very exciting space because that can increase our revenue from the existing client base also, and as well as we enter the new car line. So, just want to know what will be the revenue contribution from this new product over next 3 to 5 years.
Yeah. See, in this quarter, the new cars have given us the revenue of 23%. So we are observing that 23-25% of the revenue comes from the new launches.
Okay.
And now there, typically, we are getting newer parts also. So that can give an idea about how our continuously improving product profile is helping us build a more bigger relationship with the customer.
Okay. Understood, sir. And sir, just outlook on raw material cost. I mean, how gross margin looks going ahead?
Okay, see, raw material cost, we've obviously seen some increase in the last year, that is FY19, and we believe that maybe a percentage or 2 percentage points higher cost would be there in the raw material side.
Okay, understood. Yeah, thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sunil Shah from Total Star Portfolio Managers. Please go ahead. Mr. Shah, your line is in talk mode.
Yeah, sure. Thanks. Yeah, good morning, sir. Sir, I'll just one suggestion or some kind of a question as well. That right now, as you stated, that this new car launches account for almost 23% of our business. However, in number terms, so if we can get some data from next quarter onwards in terms of the number of vehicles, and what I'm asking is that on a quarterly basis, let's say about 6 or 7 lakh cars are getting sold. Out of that total sales of passenger vehicles, how many cars would have our components? So, we can say that out of 6 lakh cars which are getting sold, let's say 5 lakh cars are the ones where, our products are applied, whether it is the new launches or the legacy sales. So if you can get that data, that will give us an understanding of, what is our addressable market still left out. That is one which can give us on the number terms. And the second can be in terms of the content, because in some of the vehicles, we'll be selling our sealing systems, and in some of the cars, we'll be giving our injection molded products. So thereafter, how much could be the opportunity to cross-sell? Meaning, if you can get the content also, or the value of content per vehicle as well, that would also help us to understand, because you have new products also which are there, like instrument panels and front grills, etc. So how are we increasing our addressable market as well? So A, on the volume, how much is left out? B, on the content, how much is left out? If you can get that data on a quarterly basis, that would help us. It's very kind that you have shared all these names of, new Maruti Swift and all the new companies, new products which we are selling. But going forward, if you could do that, am I able to communicate what exactly is the requirement?
Yeah. In fact, Sunilji, I would like to share that we have given this input that 62% of the cars that were made in the quarter had our parts.
Okay.
Yeah. So so basically our extrusion parts are found in more cars as compared to the injection parts. So we supplied parts for 6.49 lakh cars on the extrusion side in this quarter.
Okay. So I could not see it in the presentation. If you could just include it in the presentation going forward, that would help us.
Okay.
Yeah. And also on the value wise. So, if you could give us that number as well, that would also help us.
Okay.
Content as well. Yeah. Fine. Thank you very much and all the best on the new 25 products which are going to come and stream and going free in the future. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Swarna Joshi from Axis Securities Limited. Please go ahead.
Sir, thank you for the opportunity.
Swarna, sorry to interrupt you. Can you speak a bit louder?
Sure. Am I audible now?
Much better. Thank you.
Yeah. So thanks for the opportunity given. I had a couple questions. The first one was, you mentioned in one of the earlier questions that gross margins are expected to be impacted by another 100 to 200 basis points. So would that mean that the EBITDA margins that we clocked for FY19, which stood at 18.8% or so, will also see a similar impact of 100 to 200 basis points? That was my first question. My second question was, we have is again to do with the EBITDA margin. We had been maintaining a plus 21% kind of EBITDA margin for a fairly long period of time. And now we see since the last 2 quarters, that is Q3 and Q4, we have seen that our EBITDA margins have actually come down to less than 20%. So what are your thoughts on the EBITDA margin front? So that was the second question. My third question was on the inventories that we have seen an increase in the balance sheet, both on the consolidated side and the standalone side. So is this mainly to do with the tooling inventory that was mentioned during your opening comments, or there is something to do with these inventories? So that was the third question.
Okay, I'll take the last question first. On the inventory side, basically it is the inventory for the tools. That is one reason. The second reason also is that our raw material inventory in March was on the higher side on account of the lower sales, and then there was some shipments that kind of got aligned in such a way that those were booked into inventory. So the tooling inventory obviously is a desired outcome. The raw material inventory is expected to get corrected as we proceed forward.
Sure.
That is one. Secondly, on the EBITDA margins, this year we've had a fair amount of, environmental change, if I could say, on the raw material cost side. The forex cost was up. Then obviously the base prices also went up on account of the increase in the crude. Not as much as the crude went up, but still it did have a bearing on our costs. Then also the steel prices also went up. So that is what has been reflected in the EBITDA margin, as you have seen. Now, going forward, we remain very committed towards the margin of about 18 plus, which is what we have been kind of saying, that 18 to 20% is the band in which our EBITDA margins are expected to move. So what basically happens is that we basically take up our business in such a way that we basically are able to maintain this kind of a margin. So yes, the pressure on the raw material cost side has been felt in the last year, and that itself has basically increased the cost by about 100 to 200 basis points. So given that, we are stating that yes, this gross margin is lower. Going forward, 18 to 20% is something that we are fairly committed and we are working towards. And barring any unforeseen issues that happen, we are fairly confident that we'll be able to maintain that.
Sure, sir. Just to follow up here, but in our contracts, I believe we pass on the raw material price impacts to our customers. So I just wanted to understand, how is it that it's with a lag of 3 months, or how do we do it? Because if forex and steel prices and higher crude prices impacted us, so that we would see any volatility we would see in any of these, we'll always keep a check on our margins in that case then.
The thing is that partly, forex is passed on to the customer in most cases, but then there are issues that dollar, yen, but there are issues there. Then on the raw material cost side, in some cases it's a pass-through. In some cases it is not a pass-through, as you're already aware. So it's so totaling all of it, there is a net effect on the raw material cost that was seen. The second point was on the lag effect. The lag effect typically is about a quarter, but then, yes, the delays have also happened.
Okay. All right, sir. Sir, the last question is any updates on the Hyundai partnership that we have seen? Because in the presentation, I see that in this presentation, I've seen that we've highlighted Hyundai to be one of the contributors to the overall revenue. I understand it's very small, but if you could just share what is the update on the Hyundai business front as such.
So, Rajiv, we started our relationship with Hyundai last year. So last year we developed one model with them, and now we've developed our second model. And today, in fact, yesterday and today, my team is sitting in Hyundai plant, waiting for the final, getting all the final approvals in place. And first week of next month, we should be starting our supplies for their model. And now we've started. We are also developing one more part for them, which is due to start production somewhere in August, September. And now we are based on our performance for these two parts. Now Hyundai is getting confidence on the company that they can deliver good quality and they can have good quality and delivery performance. And now we're starting to get more inquiries from them, including from their sister concern, Kia Motors.
Sure. So how much do you expect in terms of revenue that Hyundai should contribute in FY20? A rough ballpark number?
In FY20, I would assume that Hyundai would contribute about 3% to the total revenue.
Okay. And would these models be the Creta and the likes, or they are completely new models?
No, we are basically what currently we are doing with them is localizing the existing models. So this will basically what we are developing is for Creta.
Sure.
And once all these things are done, then they will start giving us opportunity for new models.
Sure, sir. That's it from my end for now. If I have any further questions, I shall come back in you. Thank you and wish you all the best.
Thank you.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Deep Shah from Motilal Oswal Financial Service. Please go ahead. Mr. Shah, your line is in talk mode. May I request you to unmute your line from your side and go ahead?
Yeah, am I audible? Yeah, sure. Hi. So, could you please talk about the demand scenario in the very near term? I mean, what the OEMs are actually communicating to you guys? Let's say from the production cuts perspective, has they kind of recalibrated all the production-related stuff? Maybe some comment on that would be helpful for us.
This new financial year 2019-20, this looks like a difficult year for the industry, primarily because of the launch of BS6 norms, which are going to be implemented from 1st April 2020. So this year we are going to see a lot of disruption in the market, especially with the question mark on diesel technology, whether it is sustainable in India at these prices or not. So I'm sure you must have heard in the print media and news media that a lot of, Maruti has taken a call that they will be stopping production of diesel vehicles completely from next year onwards.
Okay.
So there are a lot of challenges which are seeming about in this year, especially with the NBFCs tightening their purses and not letting out money. It makes the situation all the more difficult.
Sir, maybe I can ask, let's say in 1Q FY20, how is the communication from there, and has the production cuts still continuous, or how you rate the very near term scenario?
See, Maruti has again confirmed that they will be growing at about 4% this year.
Mm-hmm.
So 4% is the minimum that they are expecting. They have given us a range of 4 to 8% growth.
Okay.
The second customer for us, Honda. So Honda has basically told us that their production numbers will be more or less similar as last year.
Okay.
And Toyota again will be adjusting their production plan because primarily they're not upgrading their old models for the BS6 upgrade.
Okay.
So, yeah.
Okay.
So thanks for the new business that is coming out this year, so that will be a primarily growth driver.
Sure. Understood. Sure. So that was my first question. My second question was again related to PPAP. In that sense, if you can provide some color on what proportion of the components that you manufacture is still getting imported or 100% is localized. Maybe some sense on that. That will be helpful for us to understand you.
See, as we mentioned in the opening commentary, so sealing system what we make, we are currently making for about 63% of the total market. So our primary focus was on the Japanese OEMs when we started this business, and then we ventured into the local OEMs like Tata Motors. So currently we're not supplying too many parts to Mahindra, so that is a big opportunity for us. We've just started our relationship with Volkswagen, so that opportunity we've already taken. Korean OEMs in India were not our customers, so Hyundai we've made an ingrowth now, and so Hyundai also, but what we are catering to right now is not even 10% of their total volume. So there's a huge scope for that. And that was the primary reason why we set up a plant in Chennai.
Sure.
So there is a lot of opportunity for us. And then for these sealing systems, we are focusing on CKD exports as well, like we spoke just about 50-20 minutes back to Renault Nissan. So that is again a very important focus for us to grow this.
So if I understand correctly, I just want to get a sense. For example, the OEMs which are still not your customer or where you have not made a good inroads yet, are they procuring from the local market, or they are still someone is still importing from outside? Maybe that sense can help us more to understand.
See, Hyundai was primarily importing all these parts from Korea.
Okay.
So some models were being locally produced, but most of it was coming from Korea, so that we've localized for them.
Okay.
Similarly for Volkswagen, primarily what we are developing for them was being imported from Turkey. So that we have localized. For Mahindra, where we are not present, these parts are being made by our competitor. They are again local parts only, so they are not importing it from Korea or somewhere. But these are local parts, but I'm sure we can show our good quality and delivery and good technology to them and get business from them.
Sure. So last question, anything that you are working with the initial stage with the Kia Motors, etc., since you have started supplying to Hyundai, so is the Kia next in target?
Yes. As I told you, we're not leaving any stone unturned to increase our market share from 63%, maybe 85% or something in the near future. So Kia Motors also is on our radar, and we have just received one RFQ from them just yesterday itself.
Oh, okay. Okay. All right. Thanks a lot for this.
Thank you. The next question is from the line of Vaibhav Barjatia from Honest and Integrity Investment. Please go ahead.
Hi sir, thanks for providing me the opportunity. So for Mahindra and Tata Motors, as you said, we don't have much of the business from these guys, and these guys are procuring from competitors.
So Tata Motors, we have full business now. Mahindra, we don't have business.
Tata Motors, you have full business?
Yeah. Tata Motors, all the cars, this seating system, outer and inner, are being developed by us. Mahindra,
okay. Okay, got it. So for Mahindra, may I know like who is the competitor from where they're sourcing the parts, and secondly, is it to do more with the pricing or with some other factor that they're still hooked on to that competitor?
The competitor which is supplying to Mahindra, the company name is Anand Nishikawa or ALP Plastics. I don't know which company he deals in. He's got a couple of companies. He's an old vendor of Mahindra. Started with rubber products and then ventured into these plastic products as well. So it's got a good relationship with the customer. So not very sure of whether the customer would like to have, if they have a two-vendor policy or something for each commodity. If they have a two-vendor policy, then we can get business from them. But otherwise,
Hello?
Yes.
Yeah. I think that's it from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Harish Shial, an individual investor. Please go ahead.
Good morning, sir. Hello.
Yeah, good morning.
Yeah, my question is regarding your JV, PPAP Tokai. Can you elaborate why the performance was not good for this year? And what will be the next year revenue guidance in view of the new plant being put up over there now? What are the opportunities available for the next year now with this new plant? Hello? Hello?
Yes, sir, you're audible.
Yeah.
Yeah, see, PDI, we have been consistently growing well. Yeah. This particular year, the margins were impacted, and one of the big reasons was the shifting to the new plant that was set up. The details we have already shared. And when you are shifting the production to a new facility, the trials and all those costs were significant, which were one of the main reasons for the weak performance. Okay. Going forward, the coming year is promising, and we should be able to get good growth.
I see. Okay. So far, we were doing their contract in our plant. Is it that way?
Sorry?
So far, we were manufacturing in our plant for them?
No, they were operating out of a rental facility.
Okay.
And now they've moved to their own plant.
Okay. And one more thing. From current year, the quarterly result also will be on a consolidated basis because of the SEBI guideline?
Yes.
Okay. Thank you and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sulabh Kulkarni from Motilal Oswal Securities Limited. Please go ahead.
Hello, hi. This is Vallabh here. I wanted to there are two questions. First, I wanted to understand what is the exports opportunity and are we competitive there? What is the pricing differential and who are the current suppliers to some of the global OEMs right now?
For these plastic sealing systems, we are looking at CKD exports and currently also, so our primary customer in this business is Renault Nissan. So what they and we are already exporting to countries like Japan, Mexico, and Europe also for their model. So the way this business has developed is initially they were looking at whatever parts we are making for them for the current models produced in India. So those parts were being exported to other countries. So we started when we started production of this Sunny model for them. So that time we started exporting parts to other countries. Then they developed a very special model called Note. That model unfortunately was cancelled in India, but it was initially supposed to come to India also. So that part we developed for them and then it got supplied to other countries. And now since Quid is being developed by Renault in India and the same car is being produced globally in Russia also and in Brazil also. So Brazil we've already started and Russia we are expected to start soon. So primarily this business runs on if you develop parts for a new model in the Indian industry, then and that part is being used by somewhere abroad in any other country. So that same part is exported so that the customer then can reduce their investment cost in toolings and of course can have a better price.
Okay.
So principally, what we have studied is that we are at 0.7 ratio of Thailand, I think, and about 0.8 compared to Indonesia.
Okay.
So we are still competitive than in Thailand and Indonesia for this CKD export business.
Mm-hmm.
So any opportunity that comes through, so once the OEM decides that what is their model strategy, so that business should definitely come to us.
Okay. Sure. And my second question was more on the technology front. More of a maybe a longer term, but are you hearing anything from your customers on the technology that is used, or being carbon neutral, or being the type of material used, etc.? And is there anything that we are doing different from the players maybe in Thailand or the way you indicated right now?
See, first of all, the products that we make, so they are primarily engine neutral. So our products basically go in a IC engine also and in a vehicle which is an EV or an HEV or a PHEV, any type of vehicle which will utilize these sealing systems and injection products. So from the engine side, we are immune to any sort of a change which is there. On the technology front, when we started this extrusion business, that time we used to use PVC and steel as a raw material. Over the years, this technology has changed from PVC to steel to thermoplastics, which we introduced in the market in 2004. After that, there has not been any major shift in the material side, except for the finishes of these products. Like, instead of a black surface, the customer might require a bright surface, which may be of steel or maybe of some glossy finish of black color. So all those finishes we are already developing for them. Then the major focus for our customers was on the technology side was the lightweighting. On the lightweighting side also, we've done a lot of projects with our customers wherein we've reduced the wall thickness of the injection products and we've reduced the cross sections of our sealing system, and that has resulted in good weight reduction and ultimately cost reduction for our customers. So we recently tried to benchmark on this new technology by going to Paris Motor Show, and we've also visited China to study what is going on the technology front for our products. So we did not find any new technology coming through which is not being done by us in India today. So we are quite capable of making all these parts for all the major OEMs in India going forward as well.
Sure. Thanks a lot.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to the management for the closing comments.
Thank you, Nirav and Gaurav, for organizing this conference call. I would like to pay my sincere gratitude to all my analyst and investor friends who have taken time out of their busy schedules to listen to us today. These are challenging times and a lot of uncertainty and disruption is expected, but I'm sure we will come out with flying colors. Please feel free to contact Concept or us in case you have any further questions. Also, if you happen to be in the NCR region, do give us an opportunity for you to show around our world-class operations. Thank you.
Thank you.